Welcome, everybody. I hope you can hear us, we'll start traditional presentation of Q1 in the same format as usual, so this should be fairly simple to follow. We'll start with the general summary of Q1 and the most important things that popped up. Yes, so you could see that we had a very strong quarter in payment vertical. Yes, major contributor to operating profit growth have been the e-commerce and processing, as well as independent POS, deployment on network, and ECR, electronic cash registers. They all grew very nicely. You will see this in dynamics of the transactions also processed by different networks at the end of the slide. Yes, in banking, did announce by the end of the year, presenting Q4 results, that we expect a slowdown in 24. But having said that, Q1 was still quite good, I must say. It was continuity of the last year, but this a bit worse results we do expect as we will go throughout the year from Q2 and onwards. Definitely what was partially expected, partially it's a bit bigger than we thought, is dedicated solutions slowdown. Couple of reasons for this: mostly delay in tenders and announced deals. One of the big ones is Serbia, where we have a very strong presence in dedicated solutions and in the public. And in Serbia, they are formulating a government and have a deadline for this until 8th of May. And as it happens in that country, they are not taking any decisions, financial decisions, even if they are in budget of public institutions or the government, until all the nominees are nominated within the government. So this is a deadline, probably 8th of May, which will be there, which is a bit delayed to what we assumed, moving deals and making the expectations for dedicated solution much stronger for second half of the year. Big impact on exchange rate, about 8%. Michał will comment this later, but you've seen probably how zloty has appreciated versus foreign currencies, especially euro and dollar, and this because majority of our results are generated in euro dollar, so this has a financial negative effect on our results presented in zloty terms. In terms of things that we announced that we'll be doing is price indexation in Turkey. It's pretty successful. So we managed to index most of the contracts, and you can see this also visible in numbers, which we are very happy to observe. In important part of our business, so transactional business, you can see very strong numbers. So in the e-commerce, 28% growth, 55 independent POS network, in physical classic processing, 13%. And you see the numbers of above 500 million in e-commerce, which is quite significant, a bit smaller in the other businesses, but with nice dynamics. So this is, I would say, the major highlights of Q1. If we look at the deals that happened in banking, it all circulates still around channel solutions like e-banking or mobile banking solutions, but also a new product we have launched. We call it Financial Gateway. It's a new technology payment automation application, which the banks are very much interested in the region, and we are selling this to local banks. Some AI or BI projects, open banking projects, and anti-fraud, and these will be ones. In the security also, we have one that is worth mentioning where we see more and more interest. It's App Protector. The name comes from application security or protection type of software, which we are launching, and it sells pretty reasonably where we operate. In dedicated solutions, a slower quarter, but still a couple of third-party solutions, mobile application solutions for citizens in Serbia. This we managed to do. Some document management or workflow system in Romania, and one third party, which we always mention, Dynatrace, which is bringing or contributing very nicely to our kind of recurring revenues in this vertical. In payment, we have quite a lot, both in e-commerce and traditional payment business. You will see how the e-com and transactional business is growing in significance in following slides. As we mentioned before, but we are selling the payment gateway applications to different merchants in our merchant business. But also we are introducing new products like Buy Now, Pay Later, both as a tool for other financial institutions and as a product for merchants. In both cases, of course, in different level, we are charging per transaction. But also we have launched a product called Fintech Suite, a product that is off-the-shelf, a package to run a fintech organization on any market, but majority of the interest now that we are gathering is in Turkey, and this is developing very nicely. Yes, a lot of deals on virtual POS merchant businesses for our Paratka independent kind of or a payment facilitator business, which is developing nicely. But these are many small deals. As for traditional POS and ATM, prolongation of contracts, stronger ATM quarter and year as well. We expect a bit weaker POS, but all I would say in line with expectations. A surprising sale of Android mobile platform for an African processor in Angola, and continuity in independent POS and ECR of many in-store payment solutions for merchants in the region, predominantly in Croatia. We have a bit of delay in Romania, where we hope to grow by the end of the year as well. And now we would move to the numbers themselves. Michał, please.
Thank you. Good afternoon. So probably you remember this slide, but for those who do not know, we present here in this first section on the left results as they are in our financial statement, so directly from them. And then we have section adjusted for hyperinflation reporting under IAS 2029. And on following slides, we are concentrating and commenting slides excluding effect of hyperinflation accounting. Looking at revenues, year-over-year growth 5%, and this is fully generated on own activities. In fact, the growth of own activities in absolute numbers is even bigger, because we have decline of third-party revenues, mostly on equipment in dedicated solution and payment POS business line. Operating profit EBIT 5% growth year-over-year, in EBITDA even a bit higher, both absolute and percentage-wise. This is due to amortization of assets recognized as part of PPA process on acquisitions which were completed during 2023. And so in euro we have growth, but when we look at numbers in Polish zloty, then we have drops both of revenues and operating profit, and this is related with exchange rates and stronger zloty, what Piotr already mentioned. Average exchange rate in Q1 last year it was above 4.7, now is around 4.3 per 1 zloty. Below operating profit, in net profit, here year-over-year increase is higher, 13%, and this is due to both financial activity and taxes. In financial activity, the result is around 400,000 euro bigger than in previous year. And this is mostly thanks to a higher balance of FX gains realized during the quarter. Part of this growth, which was 800K, was compensated by higher costs related with revaluation of contingent considerations and put options for minority stakes, mostly in BSTS and Duet. Additionally, we have a bigger result on interest received for around 100K euro. As for taxes, as I mentioned, they have positive impact, so taxes are lower than in 2023. But we should remember that in previous year there was this one-off extra tax in Turkey, which was to support recovery of country after earthquake, and it was around €500,000 additional tax. Excluding this effect, we have slight increase of operational tax and effective rate. This effective tax rate excluding hyperinflation, and it's mostly due to bigger share of countries with a higher nominal rate. Increase of taxes in Turkey and Slovenia, where in case of Slovenia we have a change in tax rate from 2024. So let's move to results by business units. So as Piotr mentioned, very good, strong quarter for payment business, 4.6 million euro higher revenues and 1.6 million euro higher operating profit with improved profitability. And this improvement of profitability is linked with change of structure of business and results. We have significant growth in e-commerce and processing, 3.7 million euro higher revenues. This is mostly thanks to Western Europe and Turkey as the most important countries for contribution, and with lower increases in Serbia and Croatia. The second line, which is of our focus and where we want to grow, is ECR and IPDs, so businesses which are direct to merchant. Here we have growth of 600K year over year, which is very distributed between countries. Five countries contributed to this growth. In a more traditional business, ATM and POS, very good quarter for ATMs, thanks to deliveries. We have pretty big deliveries of equipment in Croatia, Bulgaria, and Macedonia, and this helped to increase results. But in POS related services, we have a decline of revenues. And this is mostly related with Android POS deliveries in Western Europe, Spain, which during the last 2 years were extraordinarily high. We still delivered in Q1, but the quantities and values were lower than previous year. What else is EBIT contribution by business line? So this chart on the right, where you can see that e-commerce plus processing together with ECRs plus IPD, it exceeds 50% of share. It's 54 in Q1 2024 versus 31 last year. This is very huge growth. During full year results, we commented that our goal is to reach 50% during 2024. It looks like we exceeded already in Q1, but we must admit that partially thanks to weak POSes and lower deliveries in Q1, lower result. This Q1 was a bit extraordinary, and not necessarily it will repeat in following quarters, but our target is to be around 50%. Coming back to results by segments, in banking, second line, which have growth in operating profit, 1.4 million euro higher revenues with change in structure, lower revenues in core banking solutions, where, as we mentioned during previous conference, we completed some projects related with mergers and implementation of core banking solutions. But on the other hand, we have growth in channels and security and compliance portfolio. And on operating profit, 400K higher result with pretty the same profitability as in 2023. And the last business line, dedicated solutions. Here we have drop of revenues. And also drop of operating profit. Obviously, it affected profitability in this business line. So let's move to geographies. As you can see, Turkey is the biggest contributor to growth this quarter, 1.5 million euro higher result than previous year. Around 2/3 of this growth is in e-commerce and payment, and the rest is related with dedicated solution and mobile applications which were delivered. To other countries which have pretty nice growth is Croatia, 300K higher result, mostly thanks to banking and security compliance portfolios, slight decline in dedicated solutions, and pretty stable payment. Also Iberia, here we have growth both in dedicated solutions and in payment. In payment, this growth is, on one hand, we have decline of POS business and those Android post deliveries, which I mentioned before. On the other hand, compensated by significant growth of e-commerce in Iberia. From those negative ones, Serbia, here we have drop of 1.4 million euro on operating profit. Drop is around 1/3 in banking, where we have drop on core solutions, what I already mentioned, completed projects, partially compensated by channels, but it was not enough to compensate. And around 2/3 is in dedicated solutions, what is related with delays in contracting new projects. That's what Piotr mentioned at the beginning. And the second country where we have a significant drop is Bosnia, this 300K, and this is mostly again to dedicated solutions and delay in projects. This is about results, and a few words about liquidity and cash position. So comparing to year-end, our cash balance at end of March is almost 12 million euro lower. And this is related with, obviously, with changes in other positions. So on one hand, we have repaid partially debt towards banks. Our loans are now 3.4 million euro lower than end of last year. We also paid part of deferred and contingent payments for acquisitions in amount of 2 million euro approximately. So net cash dropped by 6 million euro comparing to year-end. Below net cash, as you can see, we have significantly lower drop of receivables than liabilities. We paid more. And this is something what we were expecting and mentioning during year-end conference. As you remember, last year we had very strong cash flow. Our operating EBITDA to operating cash flow conversion was 101 or 2%, so about 100, and it was in general cash flow was strong, but partially the ratio was so high because we managed to collect advances or payments from our clients, but we have not yet paid to our vendors, and now it happened. Yes, so we paid vendors, and this is visible in this higher drop of liabilities than receivables. And inventory, the balance which we had end of last year was pretty high, and this was in big extent related with POS and ATMs, which we bought for projects planned for Q1, Q2 2024. And it happens, yes, part of this inventory was already sold and we delivered to clients, so it's visible as drop in inventory balance. All this together gives us operational balance higher by 8.5 million euro than end of last year. And moving to cash flow. So operating cash flow, 61 million euro, comparing to 70 during last year, which was strong. So we have drop here in this last 12-month numbers. The reasons, as I mentioned, below operating cash flow for investments in capex, pretty the same amounts, nothing to comment, and slightly higher M&A investments due to those deferred payments and earnouts which we closed during Q1. It was for one related with one entity in Croatia and another in Slovenia. All these give us operating cash flow to EBITDA ratio 86%. I think in coming quarters we should again come back to this 90+ level. So this is about cash flow, and let's move to outlook.
So, traditionally we show backlog. This is slightly better than end of the year, but we still see a big difference between ASEE, dedicated solution and banking part, and the patent part. So in the banking and dedicated solution part, we have this delay to the second half of the year, which is very much visible in these backlog coverage numbers, yes? Where you see the numbers are slightly lower than last year, whereas in patent they are spectacular high, very good, very nice, and super optimistic. So we do hope that the second half of the year will be looking much better in the dedicated solutions and banking part. Okay, banking will be slower than last year, as mentioned. But still, all in all, I mean, we confirm the outlook we've given after the year end of how we see the 24. In terms of other points, we did mention that we are in continuous discussion with one customer on Oracle implementation in BH Telecom, but it was troublesome. We've done a write-off end of the year for part of the contract. There's still risk of additional write-off in the second quarter. We think up to 1.3 million euros. So we don't know this yet, but this is like heads up that there is this risk potentially arising in the second quarter numbers. Otherwise, we don't see any major showstoppers, and we see, especially in Serbia, a big acceleration in late Q2, but especially Q3 and Q4. And, we are open to your questions now. Whoever wants to ask us a question, it can be on chat, it can be directly. Please go on. I think you have to raise your hand to be unmuted or whatever if you'd like to ask something. If there is no questions, then we invite you to direct contact. We are available also to have a chat, to have a call, whatever you would like, with great, pleasure, and I suppose we'll stay in touch. Thanks a lot for this, and all the best. Thank you.
Thank you.